Ron, thanks for joining me today.
Thank you for inviting me.
Let's get to it and talk about Tesla. Since you first invested, the stock is up some 1,600%. Why did you first buy Tesla, and why not sell it now and lock in these gains, especially after Elon Musk is now worrying about the Cybertruck and the US consumer?
I met Elon in 2010. It took me 4 years of doing research before we ultimately decided to invest. And we invested between 2014 and 2016. We invested a total of approximately $400 million, $380 million. In 3 years is when we were buying the stock, and that was it. And the average price, and we've made about 20 times our money since then. We made at the peak, and we've probably made about $5.5 billion in profits so far, and I think we'll make another 5 times in the next 7 or 8 or 9 or 10 years. What made us buy it is that he's a mission-driven person. His idea was to try to convert the United States, the world, from using petrol to using electricity. I thought initially it was unlikely he'd be successful. That's when I met him in 2010. 2014, I had become convinced he would become successful. And we invested approximately 2% of our assets at that time, 2% of the 21 or $22 billion that we had under management. We now have about 41 billion. And of the 41 billion, 40 billion is profits that we made for our clients over the past, since 1992. So basically, we invested because I thought there was a big upside. I thought he was a brilliant guy. I still think that. We continue to work on our research in this company all the time. Virtually every week, we're talking to someone there. I was out in Palo Alto a week ago, and I was there for an afternoon, and I met with 2 executives who were the people who were in charge of autonomous driving and also in charge of compute, of what NVIDIA does, the chips. So what we're always doing, we're trying to understand how a business operates and what's special about it and why other people can't do the same thing. And in the case of Tesla, we are convinced that people cannot do what they're doing, and that ultimately it's not just going to be a car company, it's not just going to be a battery company, but ultimately all the other car companies, which 50 years ago elected to become much more profitable and outsource supplies and compute to other people, we're going to be like Intel was inside of computers. This is going to be Tesla inside of cars. All the cars are going to be using Tesla autonomous driving. No one else can possibly compete.
Of course, you haven't just invested in Tesla, Ron. I think your second biggest position is SpaceX. Why have you made such a large investment in a private company, and what are your expectations for it?
In the case of SpaceX, we invested in Tesla, as I said, between 2014 and 2016. We were working on SpaceX the whole period of time, and we began to invest in 2017. And from 2017 through present, we've invested about $700 million. And that $700 million is the current value of about $1.7 billion. And in the case of SpaceX, we think that over the next 3 years, it's likely that they will go public and with Starlink, which is the internet for the planet. And we think that we're going to make a double in the company by then. We think that the business, which is now valued for 150 billion, we think at that time will be worth 250 to 300 billion. And we think that by 2030, it's likely they will be worth somewhere around 500 or 600 billion. And then in the 2030s, that's when I expect to make another 10 times our money. So we could make, over the next 15 or 20 years, we can make 30 to 50 times our money in SpaceX. That's why we invested. And what he's doing, like in Tesla, we are having the leading company that makes electric cars, and that led to autonomous driving. And autonomous driving is something that ultimately we're going to be able to charge. Tesla will be able to charge $2,000, roughly $2,000, $2,500 a year at least, for the ability for this car to drive, by itself. And so we think that by this period of time, over say 7 or 8 years, over the next, Tesla can be doing 15 million cars a year, 20 million cars a year, and ultimately they're going to have other, which will be a fifth or a quarter of all the cars that are made, but all the cars will have the use of the autonomous driving that Tesla is going to be providing to them. So it's going to be Tesla inside autonomous driving. In the case of space, what they're going to be doing there, the innovation that other people can't possibly do, is the fact that they are able to launch rockets and reuse them over and over and over again. So as a result of that, it costs other people to get to space $100 million, $200 million. It costs us a fraction of that amount. And when Starship launches, it's going to cost us a fraction again of that account. So basically, we can get our satellites to space for a very low cost, and we're going to have ultimately 30,000 satellites, circling the Earth, providing internet to every point on Earth. There was just an article in the Wall Street Journal 2 weeks ago that talks about how they're trying to get internet, a government program, government subsidized program, trying to get internet into the mountains in Nevada. And it costs $53,000 per house, which happened to be more than the houses are worth, because it costs $16,000 a mile to put wire in the ground. Instead of going to Tesla, where you have internet broadband from space, no one has seemed to be able to recognize this yet, broadband from space, and it ever costs you $500 a house. So $53,000 a house, $500 a house. It boggles the mind. It makes you understand how the government, how are we letting this country be managed that you're going to spend $53,000 instead of $500? Crazy. Anyway, we invested there because the opportunity, we think, is ultimately for $1.2 trillion of revenues annually. And we're going to probably get 40-50% of those revenues because we're going to be the backbone for the internet. And that means you have $400 or $500 billion of annualized revenues in 15 years, 20 years. And for that, you're going to be able to get 70 or 80% profit margin. The company pays value for $150 billion. So that's the satellite business. The other business is launching to space, where you're going to get transport ordnance around our planet, anywhere on the planet in 35 minutes, anywhere on the planet in 35 minutes. You're able to get to space to do research on space stations, to bring astronauts back and forth to space stations, to get to build a base on the moon and to get to Mars. So getting to Mars was the mission he had in mind, because he wanted to make sure that if something terrible happens on our planet, the human consciousness will not be snuffed out. But once he had the ability to get a rocket you can use over and over again, now all of a sudden this business comes along where we can have satellite broadband. Satellite broadband comes from the mission to Mars. Autonomous driving comes from getting electric cars.
You've invested essentially not only in these two companies in a big way, but in one man. How do you account for that risk reward? There's something known as a keyman risk. How do you think about that bet?
When I was in Palo Alto, they gave us access. Elon gave us access to meet with the head of compute and also with the head of autonomous driving, and for a half hour apiece. He doesn't want those people talking to investors. He wants them working in the business. And the compute person, his dad was an immigrant coming from Ireland, and he worked in a kitchen. And he goes to school and he becomes a brilliant computer guy. And he gets a job at Apple ultimately, and he runs the Apple business, the Apple Compute, very, very important business. And then he gets recruited to go to Tesla, and he's now 8 years at Tesla running that business. He says he has no turnover. Everyone there who works for him is wealthy, but there's all a mission. So I said, well, so why did you leave Apple to go to Tesla? He says, well, Ron, at Apple, I had a very important role there, and Tim and Steve Jobs never came to visit me once, not once. And when he's at Tesla, Elon comes in every quarter for a couple, 3 hours, and we talk. And he comes off initially with a big, broad question, and then he drills down. And the question, he says, I can answer the question first, and then he keeps drilling down, and he says, oh my God, how could he ask that question? How do I not know the answer to that one? So the basic is, he says, there is not another company that he's aware of where there's a brilliant engineer with a photographic memory who remembers everything and can transport information that he gets from one area to another. So he's a brilliant guy. He cares about everything he does, and he is interested in how everything works. So James Gorman goes to visit him from Morgan Stanley, goes to visit him and tells me about this story about walking through the factory and stopping at every station and him knowing the name of everyone there and what everyone does. And Walter Isaacson tells me, who wrote the book on Elon, tells me he's walking through, he was with him for 2 years. And he says, I have one example, Ron, he says, I'm walking through a plant with him and some engineers working on a valve that they can't figure out how to make it work. And Elon looks at it, as he's just on the fly, looks at it and says, do this, boo, 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 do this, do, 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 and then keeps walking. They try it and it works. And so everything this guy does is like that. So now, how do I get comfortable with one person being so brilliant and being in charge? This is like Da Vinci. This is like a businessman. This is Da Vinci. If you are an individual and you are a graduate of a top engineering school, you want to work for either SpaceX or Tesla. So you want to work with other brilliant people. You want to work on a mission. You want to work in something that's really important. You want to work in something that you think is going to be relevant and fascinating with other people like you. And he gets the greatest people. He had 3.5 million people apply for jobs last year at SpaceX and Tesla. 3.5 million people, 30,000 jobs. It's harder to get into getting a job at Tesla and SpaceX than to go into Harvard. So they have amazing engineers that are all, motivated, highly motivated to accomplish a goal, and that's what they're going to do. So whether Elon's there, of course, it's riskier when the company's smaller than when it becomes larger. But as you grow, I'm betting that he's going to stay alive for at least 5 or 10 years. I think that's a good bet. We'll see. He's got plenty of security.
To switch gears, we've had a surge in yields this year. The Fed has raised quickly and often to fight sticky inflation. Now we have 2 wars going on around the globe. Just recently, a hedge fund legend, Paul Tudor Jones, said it's really tough to own stocks here, given the geopolitical risks and the U.S. fiscal situation. Do you want to own stocks from here? And what is your outlook for the stock market and the economy right now?
So I started as an analyst in 1970, and I was in debt and living in my friend's basement, and I had $600 of cash. And my credit was so bad that when I wanted to get a telephone, I couldn't get a telephone. They said they didn't want a $600 deposit. They said, if I give you $600, I won't have money to get to work and I won't be able to pay the bill every month. And they said, well, I'm sorry, we can't give you a phone. So ultimately, there was a payphone in the lobby, and I asked the doorman to please answer the phone, Ron Barron's residence, Mr. Barron's residence. And so girls will be calling. And so answer the phone, and then just ring me up and I'll run down the stairs and they'll think I have a butler. So that was my plan originally. And so I had, zero. And in fact, I know Paul Tudor Jones from 1987, and he and I were on Barron's Roundtable together for several years. And, amazing guy. And he called the market crash in 1987. And that's what made him so successful, I think. He wouldn't have been successful anyway. He's a really smart guy. But he's a trader. I'm an investor. And so the way I look at the world is that when I became interested, I went to law school at night on a scholarship and worked in the patent office at daytime in the 1960s. And that was draft exempt, so I didn't have to go to Vietnam. When I think about in the 1960s, when Robert Kennedy ran for president, the real Robert Kennedy, ran for president, 1968, the GDP of our country was $800 billion. It's now $27 trillion. So basically, it's up. So in the 1960s, there were assassinations, there was Vietnam, there was March on Washington, there was civil rights. President Kennedy was assassinated, Martin Luther King was assassinated, Robert Kennedy was assassinated. I mean, just the cities were on fire. They were being burned because of after King was killed. And yet, it felt like everything's coming apart. And yet, the Dow Jones was then 1,000. It's now 34,000. 34 times. And the GDP was then 800 billion. It's now 27 trillion, 34 times. So basically, and that's about 7% a year growth. And it's about 4 or 5% inflation and about 2% real. And I happen to think that, and since now we are to 2023, we had a pandemic, we have a war going on in Ukraine, we have a horrible war going on in Israel, we have inflation. You had inflation in the 1960s also. Interest rates higher now, 5 or 6%. When Volcker was there, interest rates were 18%. And you had a terrible recession. So we've had recessions, and yet the market's up 34 times. And with 1 year of good news, 1 year, 1989, when the wall came down between East and West Germany, 1 year the news was good. Every other year it's been bad news. And yet the market. So the reason for that is because the value of your money falls in half about every 14 or 15 years. Regardless of what they tell you, we're going to have 2% inflation. Yeah, for a little bit. but then it'll go back up to 4 or 5 again. But on average, it's going to be 4 or 5% for my entire lifetime. That means everything doubles in price every 14 or 15 years. And the way you can hedge against that is you can invest in the market, which goes up about 10% a year, on average, including dividends and everything. So the way I think about it is that the investments that I have are investments for the long term in businesses where I think we're going to double our money over a period of time. Instead of 10 years, we're going to try to double our money every 5 years, 5 or 6 years. How do we do it? Instead of investing in companies that grow 7 or 8% a year, we're investing in companies that grow 15% plus a year. And then we have a mix. Some of these companies that we're investing in, like a Tesla or like a SpaceX, can grow very, very rapidly, but they're riskier. So we offset that risk by having investments in companies like Vail, which has or Hyatt, real estate companies, resort companies, financial companies like Charles Schwab.
Ron, I think that this buy and hold concept of a concentrated portfolio has worked for you, and it seems to have worked in these markets. Is there another Tesla that you're looking for, or another sector that you think the next Tesla could come from?
I think SpaceX has a chance to be even bigger than Tesla in the 2030s. And that's saying a lot, because I think Teslas can go from being worth $600 or $700 billion now to being worth $4.5 trillion in 10 years. And in SpaceX, by 2030, can be worth $500 billion, $600 billion. And I think that ultimately it can be bigger than Tesla. So that's one area. You don't find a lot of these companies, and therefore when you find them, you better keep them. So most of these companies, they're doing better than the stock market, which is how come we outperform the stock market.
Ron, thank you so much for taking some time with us today. We really appreciate it.
Thank you very much.